Welcome to the Owner to Owner podcast. I'm Michael Kerr, your host, and I'm also the founder of Kerr Capital, where for 22 years now I've worked alongside business owners. Owner to Owner is a business podcast to empower the owners of Australia's small and medium enterprises. Forget the slick stories of tech titans and unicorns. At Owner to Owner we get raw and we get real. Every Owner to Owner episode is a personal conversation with another business owner just like you. We explore the everyday struggles they face and the different pathways they tread to success. Practical advice and plenty of one percenters for better returns, less stress and more enjoyment. You'll find grit, laughs, maybe a few tears and some hard-won lessons only available from others who've been where you are, whatever your stage of ownership. Every owner has a compelling story to share, so join us to listen and to learn. Welcome in, Gabe Villarreal. You scaled a liquor business from nothing to about $1 million in monthly revenue. You did it inside of 2 years. You sold it successfully. There's a lot of hype around about how to scale and exit. So it's really great to have in someone who's done it a couple of times. Looking forward to this chat, Gabe. Welcome in.
Thanks a lot, Michael. Thanks a lot for having me on. I've actually, exactly that. I've done it. So, what I actually like a lot about your show or your podcast is having those genuine conversations and how do you get probably behind or beyond a little bit the glossy headlines, and you get more into the nitty gritty. So I really like about that. And hopefully today I can add some value and actually share a little bit of my story of how it all started, what happens in the middle, some lessons, what went well, what didn't go so well, and what I would do better next time, or I would have done better.
Well, yeah, I know there's already a next time because you're continuing to do that. So
absolutely.
In relation to the liquor business, was to get us started, I just want to get a little bit about this particular business, a little bit about yourself, and then we'll go into the how-tos and the lessons learned. But when you started the liquor business, did you start it to scale it and exit?
Yes. The short answer to that would be yes. The reason for that being is this wasn't the first business I had. I guess you get your lessons along the lines, but yeah, the short answer would be I started business thinking 3, 4, maybe 5 years down the line exiting. I did have a figure in mind. I wanted to exit that for eight figures. I already knew a bit more about, I had the experience of growing businesses, but I knew a bit more about merger and acquisitions as well and how that works. So I was quite confident of what I was doing when I started. But yeah, I did have an end goal in mind. And in saying that at the same time, talking about exit, it's probably not about the exit itself. It's also, or more importantly, talking about options, having the option, because if it is going great and you want to keep it, you can keep it as well. But yeah, I started that business in particular with that goal in mind.
So it was a very, very much out of the textbook, if you like, I'm going to build this. I'm going to scale this. You did it. It was based out of Brisbane in Australia when you're doing this. Just briefly, what was the business and what sparked the idea?
Yeah, it wasn't. It's interesting because I've been around a couple of different industries in a couple of different countries as well. I've been in healthcare, in mining, in software, and a couple of different things. And liquor never came across my mind, to be 100% honest. This was more about spotting a shift in behavior, a behavioral change during COVID. As you probably, you will remember, everything was shut down, bars, cafes, restaurants. And it was a little bit about bringing that experience or the concept of bring the pub home. So people couldn't go out to the pub, but people were spending a lot of time and money as well in renovations, renovating the outdoor or entertaining area, putting good barbecues, the pool and everything else, good bar fridges around the pool area. And the thought was, why we don't bring the experience of having that pub experience at home. So there was a shift in behavior, and I think that was what sort of sparked the main idea or the concept of that. Of course, there were a couple of gaps in the markets that also identified back then. So a couple of things was, you probably heard or seen keg fridges or kegerators before, which is essentially it's a fridge with a tap, and you can dispense beer straight from a keg or have beer on tap. So, and that was well known in the US, in Europe, in Australia as well, but mainly by the home brewers. It wasn't so well known by just the day-to-day person. So it was more like home brewing people that was more into that sort of thing. And it was the
More
idea
for
is
the
like,
beer nerds.
yeah, that's exactly right.
Right.
But then the regular drinker that wants to entertain is like, well, or they don't know about that, or they didn't know about that. Now it's a lot more popular. And B, how do I get a keg? It's like, if I'm not doing home brewing, what do I get a keg? What do I get my carton draft or my VV or my Forest Gold here in Queensland, or the Great Northern, all of those great commercial brands. And then on top of that, you have all of the small breweries and all of those brands. So it was like, how do I get that? It was like putting the two of them together, what was a little bit the main challenge. Even, I guess, from the licensing point of view, there wasn't a straightforward license to actually start being able to supply kegs off premise. So kegs were sold originally only, or the concept was more operational efficiency for pubs and bars. So rather than changing bottles and cans, they can actually have kegs, so it's a lot more efficiently operational. Yeah, that's exactly right. Yeah. So the purpose wasn't for that to be sitting at home, but that's why we started with that concept of bring the pub home.
Yeah, so I mean, it sounds like there was a timing thing as well with COVID, because people were at home. If you want to have that draft beer on tap. So
that's exactly right, yes.
Yeah, but before we get too far into that, and this goes to what must be an innate ability for you to spot opportunities outside of your own industry or, professional experience, because liquor for you was a new market. So let's talk about Gabe and arriving in Australia with, I think your definition, two suitcases and a big dream. Tell us about that.
Yeah, absolutely.
What set you up to land in Australia for an entrepreneurial career?
Yeah, I guess it's been a long journey. So exactly as you said, I'm originally from Argentina, so I was born in Argentina. I grew up there. I studied there, did my bachelor's there, had my first few jobs, first few businesses as well around there. Always had sort of that sort of entrepreneurial mindset. So I always had a side hustle. I've been doing different things when I was young. Eventually, I ended up moving to Brazil, where I kept continue my career, and at the same time I continued a little bit of my entrepreneurial journey around there, and simultaneously I was doing my MBA down there, another language. So it was the first starting from scratch sort of situation. So I was facing a completely new culture, new language, new set of things. How business get done down there was completely different than from Argentina as well. So I was learning everything. And again, you don't know anyone, you don't have contacts, you don't know people, you don't have friends. It's like, you go literally to a place that you don't know, you don't speak the language, and you guys just start from scratch. So that takes quite a bit of, it takes you a very least out of your comfort zone. And then I've done the same thing when I came over to Australia. So that was back in 2016, so a bit over 9 years now. Exactly as you just said, I just came with 2 suitcases and a big dream, and I knew that I wanted to make it and take all of the opportunities. And again, it was starting from scratch again, because it was like a different stage of my life, and it was, okay, I got to make it work professionally. I got to start again, new language. I didn't speak a lot of English. I had some, I guess you learn that at school, and you do a couple of tests and lessons and all those sort of bits and pieces, the basics, but you never, until you're there and you're not immersed into a new culture and language, it's always a challenge. It's quite challenging. And it's probably more challenging of what people think. And it goes beyond of, one thing is being on a holiday on a place, It is, or even for 6 months, and it's not the same thing that settling into a place. It's complete different. Yeah, complete different game. And doing that once, it takes a lot of courage, but the second time, actually, it really builds character. It really does.
Your character, resilience. Yeah. I mean, whatever your personal drivers were to make that move, brave comes to mind. Was there anything about coming here because you thought the entrepreneurial opportunities were greater, or was it a lifestyle-led thing, or a family thing?
Actually, a really good question. I was back just before going to Brazil. I had a bit of a dilemma. And there were two places that I wanted to at least live for a year, and one was Australia, and one was Brazil. And I was in that situation. I think it was like 23 years old. And originally I was going to come to Australia, and I was going to come on some of those, what do you call it? It's like work and holiday visa or something like that. And that was the idea. And always I wanted to get immersed into the language and learn properly English as well. And also the lifestyle and what you see always, so the beaches and all that also always attracted me. But then I had an opportunity to go and work in Brazil, and it was like, well, do I go on the work and holiday path to Australia or to work in Brazil professionally? I ended up going to Brazil. And that was always like on my pending list. And one thing leads to the other. Eventually I had a job opportunity here in Australia, and that's why I ended up making the move. And it was, okay, I'm going to do this once again, but you always take a risk. Things might not work out with the job, with the company, with the culture. You might not like it. They might not like you as well. So many different variables. And at the same time, it's like, well, you got to think about, how do you move? And you got to I got to get rid of my car. I'm not going to have a car just sitting here for 2 years or whatever. So you start getting rid of literally everything. And it's literally just, okay, well, we're making the move, grabbing 2 suitcases. And it's like, okay, well, we got to make it work. And my wife, back then, she was my fiancé, so it was moving us together here and having the full support. I think that was actually really important. But yeah, and the first couple of years were really challenging for the two of us. She was a lawyer, so she's got a bachelor degree in law. Obviously, she couldn't work as a lawyer here. She didn't have the language. I had a bit of a language, but not that much. So it was always really challenging. And you're always as well in that process of the visas process, that changes. So it was, the first couple of years was adapting, learning, and trying to, probably for us it was like, well, we really like it here. We want to make it work. The goal was make all of the steps to actually settle in here permanently.
Yeah,
and that took a couple of years.
You put yourself in a scenario where there's really no other choices. It's up to you and your partner to make things happen. You want to be here. So, maybe that's part of the secret sauce of when there's not all these
many
choices, you've got to make the choices yourself. So that's probably a good opportunity to parlay into some more specifics on this liquor business, which I think you said was an 8-figure exit. Was that?
No, that's what I wanted to do. Eventually, it didn't happen. Yeah, it was a bit of a timing issue. We worked probably about 12 to 12 months to get there, but I figured I had a bit of a dysfunctional partnership at the time. I prefer to probably step back, and I probably value more progress than friction. So I was okay. And because I already had that sort of mindset from the very beginning, I established a business from day one that could literally be sold even on year one if I wanted to. So the mandate, it was very prepared for that. So from cash flow, profits, thinking about the operation, even if it was small and probably the value wasn't there from very early stages, it was always thought about. And that's, I think, something that everyone that owns a business, even if they don't want to sell, you need to be ready, because you need to you actually need to have options. Otherwise, you'll be caught off guard, and
you don't want to put all your eggs in one basket when it comes to crystallizing the value of your business.
That's exactly right.
we were chatting on Friday just before, as a bit of a precursor to this, and the way you talked about it early in the interview, having the option to keep it, having the option to sell it. If you have a business that has both of those options as real options, you're in a really good place. But it doesn't just happen naturally, or it doesn't happen easily. You've really got to put some work into it. So let's get into that a little bit more. You go about, find an opportunity, you start to think about building it for exit. What's the framework for you from the point of view of starting and building a business around or within a framework that it's ready to sell at the time in the future that it's a target timeline? But what are some of the things that are the really important component pieces of that framework from an exit perspective?
Okay, so there are a couple of different parts to that, I guess. So, and there are businesses and businesses, as you know, and sizes. And so if we talk about, let me ask you a question. So do you want me to talk a little bit more about how do you start and get it ready for an exit, or how do you get it from an exit when it's already working, I guess?
I think in the context of the discussion today, it's really, firstly, you've started a couple of businesses from scratch.
Yes.
So I think it is important to talk about how you pick a business that can scale. How do you scale it? What are the pains before you get to the juicy part of
Yes,
having the
absolutely.
option to exit?
Yes, I guess there are a couple of different things. One is I always like to say, a person of imperfect action that takes imperfect action, it always will be ahead of someone that is just way too cautious. And I'm not saying for people to make irresponsible or making irresponsible decisions. That's probably not the message. But people of action, they usually end up significantly ahead. And if you have a problem, you'll find it a lot quicker rather than just sitting on the sideline and trying to, think about the risk and this and that. So I'm a person of action. And saying that, I'm also quite extremely analytical as well. And there are two different things about or probably there is a way that I started businesses before, and that'll be completely different of how I see businesses today as well. And you learn with your errors. So I think one part is, if you want to start a business, usually to me, the easier way these days is probably services, and services usually that don't involve a lot of equipment. Ideally something that you know how to do, that you know that you excel about, and that you can actually, your cost is your time, literally. Or sometimes if there is some equipment involved, you can hire that just to do a proof of concept. So I always say, don't go and start a business and try to blow 50 grand or 100 grand just so you don't know whether that concept that you have in mind, it will work or no. So do a cheap, quick proof of concept, gain a couple of customers. I say it's always about the first sale. Then once you make the first one, make the first 10, and then sit down for a minute and assess what went well, what didn't go well. How do you model the offer? Is there a real problem that you can solve or no, or demand for that? Is there product fit, market fit? How does that work? So start thinking about all of these bits and pieces.
And you say, sorry, Gabe,
Yeah.
was that, you mentioned, I think, the term imperfect action? Was that?
Yes, imperfect action. That's exactly right. Yeah.
So that's a methodology of not waiting till it's perfect to find out.
Absolutely.
Essentially.
It'll never be perfect. Don't wait for the perfect moment. Don't wait for the perfect situation. Don't wait until you have the money. You can make things happen more this time in year. I think there's never been a greater time than right now to start a business and do a proof of concept quite cheaply and quickly as well.
And also, was that you talked specifically about service businesses, because it's low capital, but is that also about doing something in a domain that you're familiar with, as opposed to stepping across and trying to be in some industry or some market where you've got no experience, no contacts? Is that a part of it? Pick the right?
Absolutely. If you start in services, absolutely. I agree with you. Pick the right game. So do something that you already know about, or or you know that you don't need to be an expert to actually go and execute it. So it can be these days. It can be or something that you're an expert on, or something that you really know about it. Or you can go into services like easy services these days, like literally all sort of services. It's quite incredible that the lack of people around, because you start asking for quotes on all sort of services, and you don't have them. So if they are easy to do, or get started, or learn, or get the equipment, then that's the other way that you could do it. But I guess if I had to start something from zero, I didn't have any money, I would go probably in something that I actually know of how to do it very well, get the first customer, understand where the value is for them, get the first 10. Even because your cost is your time, literally, you could actually do the first couple for free just to get a bit of
Get
word
the
of
first
mouth.
sale.
Yeah, exactly.
Be focusing on the second one rather than the first one.
Focus more on creating value for someone else than just, I want money on the first deal, or the first thing that I'm doing. I think a little bit more longer term than just next week or tomorrow. So that's probably something that how we get started. If I had to start a business with no money and no capital experience in business today, that'll be the way to go, at least for me.
Yeah, it's interesting the mindset needed here. You've got to be brave, not be afraid of mistakes. You got to go fast. I think was it the MVP methodology? Was get out there and trial it rather
Absolutely.
than sitting back and
Thinking.
you're smoothing it over and refining it, and never actually getting any feedback about whether it's any good or not.
Yeah, I can't remember where it was, but I heard it recently somewhere. It was like talking about the thing is not doing the thing. Thinking about the thing is not doing the thing. Planning about the thing is not doing the thing. So the only thing that actually moves the needle is going and make it happen. And again, it's not about doing it responsibly, but sometimes the concepts are so simple that you just gotta get on and get it done. And that's
Yeah, I think, and it's also if you aspire to be a creator and a seller of businesses for whatever your motivations are, the process, it is a process,
absolutely,
overused term, but
yeah,
and you get comfortable. You can have your business and you can have your product or your service, and it may or may not fail. But a step back from that or up from that is that you've gone from the beginning of something to kind of the end. So the next time you do that, you'll be better at the process piece of it. And it might
absolutely.
be picking a better service or product or going faster at this stage or whatever. But there's a process thing which is called building to exit. And there's books written on
Yeah,
it. So
yeah,
it's
and
nothing.
this is the other thing that can be really interesting, and might add or might not add any value. But I actually think that we should start. We all talk about the successes, but we should start talking and normalizing more failures, because every overnight success that you see out there, it has probably a lot of repetitions and failures before. It's like going to the gym. It's like no one turns up and all of a sudden is bench pressing 140 kilos. The guy probably started with 10 kilos, 15 kilos, and going up and up, and you fail at the 20 kilos, and then you step back, and then you get an injury, and then you start going up again. It's not different in business. So you get, and probably in business is worse actually. I generally think that we should start talking about accruing failures. You gotta accrue those as quickly as possible, because they are the ones that teach you what is next, and why you shouldn't be doing next. And so
Yeah,
that's I think it's part of the game is failing. Like we make out of this big thing, like we make this big horror story, and there are big horror stories as well, because there are big failures about failure. But you should be thinking about, we shouldn't be going out there thinking, oh, I'll turn this into 20 million tomorrow. Maybe think about, if I fail, what do I learn out of this, and how do I protect the downside of failing at this thing? And in the worst case scenario, I learned something new and I won't do it
yeah,
next time. So I think accruing failure is something that is really, really important in that entrepreneurial journey.
for sure. And there's too much of a culture of chasing and mimicking who's been successful and focusing on the bit that they probably got right, where there's all these other things from a personal point of view, having capacity for resilience at a practical
Absolutely.
level, having some resources to pay some form of basic living, right? So yeah,
Absolutely.
everyone's at
Yeah.
different stages of that, but it's the idea that there is a silver bullet magic solution that works every time. I mean, you hear about it all the time on LinkedIn and various other places about guaranteed successes, and there are seminars and whatever run on foolproof way to do whatever. So yeah, I agree 100%.
And it's interesting as well because and that coming back to your original question about how do you scale up or start a business. I think it's one maybe linked to that as well. I get all the time questions from professionals, usually people that want to be my own boss, and they are probably earning good money, good salary, stable lives. And say, I don't like this life. I want to be an entrepreneur. How do I do it? Or they come to me with like, give me the magic solution, and there is no magic solution. Something that I always try to recommend, which I've done it myself, and I'll talk to you a little bit more about that if it is interesting. But it is the fact that I always say, don't put all of the eggs in one basket and try to go and quit your job, put all of your money or your savings into this new business venture, and then you don't even know whether you have market fit or not. Like, don't do that. I think that's actually not the way to do it. It might have worked sometimes, and you hear a lot of these success stories, but you don't hear a lot of the failures as well. I had my failures, and that's why with this particular business, if I come one step back, I was making progress in my corporate jobs and corporate work and making my name out there in that part. And I was working my full-time hours, and usually it's never 40 hours. You usually end up stretching it out to 50 or more. So I was working my 50 plus hours. But at the same time, I started this business from literally nothing, and it went quickly. But there was a point that I was like, I was doing that double life. So full-time hours in my job, full-time hours outside my job, and working until whenever I could. And until eventually I had a team of 6 people working in the business, some of them full-time. And they were needing me full-time as well because they were calling me throughout the day, and I couldn't even pick up a call. So it got a little bit messy, but eventually I had to back myself 100%. But I was like, okay, I can pay everyone. I can survive on this. Now I can make the move. And that's when the business took off, really, when I made 100% of the move as well. But it took
Yeah,
a little bit.
because the opportunity, if you're earning 200, 300, 400 grand a year as an executive, it's a big trade-off, a big
Absolutely.
opportunity cost
Yeah.
to give up that.
And you got to measure the risk as well. Yes, there is a big potential, but you just can't go only on the potential only. You need to understand that you got to pay your bills. You might or might not have a mortgage as well. You might have kids. So you need to understand what's your cost of living. I always say it is very wise to at least try to keep 12 months of funds if you are going to business venture and just putting all of your time into that. And ideally, the business needs to have some sort of traction. And that's why probably I like more buying businesses than starting businesses today, because you already have customers, you already have, it's working, it has a brand, it already has cash flow, sales, etc., etc. So you can play a little bit more with that. It's a lot better than actually starting from scratch.
Yeah, you skip a few steps ahead of it. And there are so many of those out there that you can do so much with.
Absolutely.
I'd like to come to that, but just to kind of round out the scaling to exit thing, I'm kind of just fascinated with each day you were building that business. Did you think about the exit sometime down the future? Did that guide you as to what you did day to day? And did you have targets, KPIs that were linked to an exit in the future that kind of gave you that extra incentive tomorrow when you're a bit sluggish? And if
Yeah.
you were just there forever in the business, you might go, I'll give myself a bit of time off or a bit of a break. But did you kind of drive yourself because, no, we need to be here at this quarter or this month?
Yeah, it's actually a really good question, and I'm trying to think a little bit back. Yes, definitely. target-driven person. So everything has frameworks, targets, strategy behind. I don't move one finger without thinking about the long-term goal or the bigger picture. From day one, we structured this business, put a lot of the structure of that business with 5 or 10 years. Usually they don't have. And by that, I mean, not structure in terms of putting a lot of money. It was more putting about systems, KPIs, the people, the frameworks, the culture, how we were going to be growing and be dealing with that growth as well. And so, yes, so the short answer would be yes, I had the KPIs from day one. So there was a target. This is what we got to hit on month one when we're opening. Month 3, by here, we're going to have this type of employees. We'll need this type of people. I actually knew from day one that, and we can talk, I think that a lot of businesses, they don't die because they lack growth or capacity to grow. It's actually, they don't have a good handle on their finances and cash flow. And a lot of them, they die in the first 5 years. You hear a lot of this stat about 95% of businesses, they die in the first 5 years. And usually it's because of cash flow. That's the main problem. That's why they die. And actually, as soon as we didn't even have the capacity, but I invested in having someone to be looking at our weekly cash flow because it becomes really complicated as well. So it wasn't even monthly. It was like, we need to be looking at this weekly. There was a point that we were looking at that daily just to make sure that we could make sure that we meet all of our obligations, but we could grow as well. So it was all linked to, yes, so that we got to be hitting this point where this type of sales, this type of profit on year 1 and year 2, this is where we want to be on year 3, which were, actually year 3 was even exceeding a little bit what we were thinking that we would be. So it was, it was about having those targets, those KPIs, and everything and everyone was linked to coming back to that, how we're going towards this. But it wasn't just thinking about a big valuation, but it was about, at that time was about more the growth, the process, and making it work for everyone involved or around that business as well. So, but it was, there's nothing like knowing where you're going.
Or not.
Yeah.
It's a good thing, right? It's like we're talking about celebrating failures. If you don't know where you're going, you probably won't get there.
Absolutely. Yeah.
That discipline of, think about cash flow, think about the day-to-day in a business. I've written quite a few articles about using your financial reporting, not just for compliance, rear view mirror. How am I going day to day? And how am I going against a view of where I'd like to go?
Absolutely.
There's a lot of, and I understand you get caught up in a very busy day-to-day business and you're not sure what you want to do. You're not sure where you're going. You can easily just bumble along and kind of get to the end of the week and go, oh God, I can't wait to. But the thing of, with exit plan or scaling to exit, having a future target in mind is why it's so powerful. Is that you can make better decisions today or tomorrow about using that forecast, projections, how you're actually going, and you
Absolutely.
can see where it's going to affect your pathway to where you really want to get to. And if you're not sure where you really want to get to, go back and before you do too much more, just work on your, what do you want out of your business? Do you want to just have a business that just ticks along? Do you want an exit? Do you want to grow it 500%? Be clear on that, because everything's fuzzy, but numbers, credible numbers that you've really put time and energy into thinking about are impossible to ignore the power of them when they're thoughtfully constructed. Hi there, just a short interruption and a message from Kerr Capital. Kerr Capital specialise in advising business owners who want to get sale ready or, as is increasingly common, get approached out of the blue by a potential buyer. If this is you, I know there'll be plenty of big questions and a lot of uncertainty. We're expert at supporting owners in making significant personal and business decisions and then helping create a really strong plan of action. If you want to find out more, contact us at the Kerr Capital website and then we can book a 45-minute no-obligation discovery call. Now let's head back to the podcast.
I think you hit on the right key there. It's impossible to ignore, but it's quite fascinating how many businesses they just ignore it. And I'd say, probably 95% they just ignore it. Mainly these small and medium-sized sort of businesses. And probably like you, I am convinced how I run business. I run that from two places, which is one is targets and goals. And that comes also from a budget. And I do that weekly and monthly. I know my numbers literally everywhere. So, and everything has KPIs. So from the financial KPI I usually run the monthly P&Ls. We reconcile that monthly. We talk about that monthly. Where are the sales? Where is the cost? The cost of goods, for instance. Was that better? Do you need more margin? You don't need more margin. Where are your other costs going? Are you spending too much on marketing? Are you spending too little? What is your return on investment? What is the return that's bringing? People as well. Is that getting out of control? Your casuals, this and that, energy, fuel as well. Why? Yeah, this is not matching what we need really. So look at all of the numbers and you start looking and say, well, this is fat that can be trimmed. This is fat that can be trimmed. And start looking and tweaking things. It's like, well, start working on your pricing, start working on your offering. And it has so many different pieces that if you don't run it from there, I think it's very difficult to get where you want to get. And if you talk a little bit more down the path about talking about an exit, it's almost impossible because your numbers are never going to be telling a good story.
Yeah.
And I'm not telling a good story. It's because you just haven't planned for that. And that's why you don't get there. And it's a lot easier. I'm a huge believer of discipline in life, in business as well, similarly. And everything starts breaking down from there. So I say, well, I want to be, this year we made $2 million in sales, and next year I want to grow to $5 million. How do we bridge a gap? What does it mean? Let's look at month to month. Let's look at week by week. What do we need to be doing differently? Do we need to expand to new sectors? Do we need to do new offering, new services? So $5 million a year, that means that we got to be making significantly harder effort in this time of the year. What do we got to be making monthly in terms of sales, weekly, daily? So, and then that's what the sales targets come from. It's like, well, daily you got to be making this, and if you get there, everyone gets rewarded.
And also, I think the line from there is that if you're at $2 million in that scenario, we don't want to spend too much time on this, but if you're at $2 million and you target getting to $5 million, understand what drives the value of your business, what it looks like at $2 million. Then if you get it to $5 million, what does that do to change the value of your business? And that value that you could reasonably expect to get at $2 million and you can reasonably expect to $5 million, it doesn't have to be about exit planning. It's another, maybe it's almost the most important metric of all of them as to how you value today and how it changes the value
absolutely
over time if you meet certain targets. But
absolutely, and one question. Sorry to interrupt you there, but I think this is the other tricky part that you don't hear a lot about. I think what took you to, well, I don't think I know that what it takes you to make your first $200,000 is not the same thing that will take you to 1 million. Definitely not the same that would take you to 5 millions, and definitely a different set of skills to get to 10 million. A lot of people say make your first million is the hardest. I actually it's not probably, I disagree with that. I think the hardest part of an entrepreneur is when you are trapped anywhere between that 2-3 million mark to probably closer to 10 million, because you're still on the line. You need a lot of capital for growth, and you need a complete different mindset to operate that and grow it to that scale.
Yeah.
But once you make it, it's a completely different, you actually probably will own a proper business, and the valuation of that thing scales up significantly quicker, not just in a linear way, but in an exponential way, as you probably know. So,
that's cool.
Yeah.
I want to continue. We just started to talk about scaling and exiting, but buying an existing business and cutting out the first couple of steps of that process. You've started to
Yes,
acquire businesses with the same logic. Is that right?
absolutely.
Acquiring something that's already got a customer base or some relationships or market position, a brand, whatever it might be. But are you seeing that as a smarter, quicker, more efficient way to get a hold of an opportunity and grow it and then exit, or is it keeping them?
Absolutely. Yeah,
You said it having optionality, so I'm kind of answering my own question. You're
yeah,
skipping
yeah.
the first few parts of the process, growing it, and then having the option to do either.
That's exactly right. That's with that view. What I think, thinking on this way, your chances of success are significantly higher. I've seen different stats all over the place, and there are some American stats and in Australia as well, of the chances of you succeeding. Compare if you, let's say that you spend, just give you a number, XYZ, could be $500,000. If you spend $500,000 just starting your business or $500,000 buying a business, the chances of success will be significantly higher if you are buying something that is already established. So if you compare pears with pears or apples with apples, at the end of the day, the chances of succeeding is a lot better. I don't think that people understand what actually it takes to start a business. It looks fun, it looks sexy. The behind the scene, it can be quite brutal, to be 100% honest. And it takes it takes a lot out of you, and not just of you, of your family, everyone that is around you, because it just takes literally everything that you've got. You got to put it in there to make it work, from your finances to your emotional energy to everything else into that to make it work. So starting the business is not easy. Of course, starting the business with experience and knowing what you're doing, it's significantly better. But if you can skip the first couple of years and then get a business that is already working, as you said, customers are there, cash flow, there are profits. So then you start thinking about, okay, if I acquire this recently, which is the tricky part, and it's a proper business, then how do I actually, what are the things or the bottlenecks here? What are the few things that I can turn around and quickly scale and grow this business? And it's a lot easier to fix some processes and systems in that business rather than trying to do it all from scratch. You already have market fit as well.
Yeah. Well, like, if a business has got $1 million of turnover or $500,000 or whatever, it may be about to get disintermediated or disrupted, but even that, you can do the disrupting, right? You can come in and disrupt that business. But capacity of the past or the existing ownership is always a constraint on just about every business I've looked at. And it's not a criticism. It's just, you said it, there are different challenges at different stages. So a lot of small businesses get to a stage of turnover and complexity and size where it'll do. But the exciting thing is that somebody else, and I always ask owners, what would they do with the business if they were 20 years younger? What would they be doing to triple it or something? And mostly people will go, well, yeah, I'd do this and I'd do that. And because there are just so many small businesses, the opportunities to really take on an industry, a geography, a segment is pretty strong.
Yeah,
By
and
scaling.
usually, this is the interesting part about that. Number one, there is a massive, the Australian economy is founded in small businesses, which I think the second part it is there is a massive population of baby boomers that now they want to retire, and a lot of them they are business owners and they have these small businesses. And sometimes they are small shops, sometimes they are not so small, but at the end of the day, they build something for 15, 20, 30 years, some of them. And I come across and I talk to these business owners every day, and some of them, they don't have where to pass that on. It's like, have you got a son or a daughter, someone that wants to take that on? And yeah, I do have my son, but he's interested in tech, or he's not interested at all. He doesn't want to do anything to do with business, likes more art or this or that. So today's probably preferences are completely different. And They are not interested in being
Yeah.
mom pop shop. And then, so you have this situation where then they start trying to sell it, and it's not in a situation that could sell. And probably they left that to until it is too late and the numbers are showing already that probably is on a decline, or they're probably not so engaged in the business. So they don't have the option or a good option to get out of that. So you see a lot of these businesses that are really well established. They have market fit. They wouldn't go anywhere other than maybe they want to retire. And then you have this gap in the market where all these businesses are going, and a lot of them they actually end up not selling for a
Well, they
number of
just
different
close.
and they close. And it's so sad to see that go. And employment goes as well together. There are always 1, 2, or even 10 employees in that business, and
Yeah.
that shuts down. What's that?
I mean,
Yeah,
it's really, that a lot of them do. And many also just kind of dribble on for a lot longer than they should. So they
absolutely.
they think now's the time I want to sell. So off I'll go to see a business broker, and I'll try and get it sold in 6 months and for a price. But the damage is done. And so a lot of those just do end up closing, but it extends the life of the business under that ownership unnecessarily longer.
I agree.
They
Yeah.
really would have been happier and more fulfilled being out 3 years ago or 5 years ago, because they could have done what they really wanted to do, which was it's outside the business. It's without all the day-to-day stress, and it's go off and travel or play, whatever you want to do. But it's definitely, for many, not being in the business when they don't want to be in the business. And it's really
Yeah.
awful. And I'm sure the flow on is that a lot of those just peter out and close it. But it's the
It
opportunity for
shows
entrepreneurs like you.
exactly, but it shows in the numbers, and it's really sad to see those businesses go as well. Unfortunately, it just creates unrealistic expectations of what they're going to be selling for, and I think that's something, whether that is relevant or not for today. But I think that's something that that brokers industry, it's a little bit broken, if you want to call it. We were sort of touching base on that the other day, but I think it's
Love to talk about this. Go on and talk about your experience of selling businesses and business broking
look,
or advisory.
at a high level, I think it's in short it's broken, and I think it's for a number of different reasons. But I think the model itself is broken because the way that is incentivized, it is broken. And let me explain what do I mean by that. Is I think that what happens is usually the broker is just looking at a short-term transaction and is trying to sell something way more complex than property or a house. Is not a straightforward value. They try to do it that way. They try to look at it that way and make it a very quick transaction as quick as they can. And what happens is, where is the disconnect is they sell to the seller or to the business owner. Usually they sell them the dream, and they come with these magic numbers, which they never make sense to me. And they have generally very little to do with the reality of what the valuation of that business will be. So they sell them the dream just to get them hooked, and they sign that agreement. And so they'll be the listing agent and to list that particular business itself. And what happens in that is they sell them the dream, and then they sell to the buyer spreadsheets. And they're usually, they come with all of these disclaimers saying, like, we try to represent this in the best way possible. But the reality is that they already know that the spreadsheets, they have a lot of fat redundancy and a lot of things that they probably are not completely aligned with the reality of how that business works or we work. And the problem as well, the other problem that I see in that industry, it is because they need to see the incentive into when they sell, and they don't usually comprehend the complexity of selling a business or a business itself. Then they end up killing anything that can be outside the scope of, I want to sell this for $1 million, and if it is anything outside this, and it needs to be cash, it needs to be at settlement.
Yeah.
And anything that is outside what I consider to be a good deal for me, is not even for the seller, it's a good deal for me. I'm shutting this down basically. So, and that kills a lot of A lot of
Yeah.
businesses, they actually, because of the complexity, you're not selling a house. It's not a house in a location or a blue chip suburb where you know that the square meter is this around there for a house and blah, blah, blah. So you have a straightforward valuation.
And you can look up a comparable sale from last week or last month for 10 properties, and you're going to be within a pretty small range.
That's exactly right. And it's backed by a tangible asset as well. So let's say you bought something for $1 million. Maybe you pay an extra 25 grand, but you know that it's still nearly $1 million back of worth of something
Yeah.
into that asset backing it up. Now, if you just trust one of those spreadsheets and that valuation that is overly inflated, and you bought something for $1 million, and then the next day, what happens? Think about this. What happens if customers, they go with the new owner say, oh, I'm not here, and then customers start saying, no, I was only loyal to this
Yeah.
company because of the owner or for this and that reason. So the customers are gone. Then the people or staff that know how the business runs, they leave. They don't like the new management or whatever, so they leave. And then all of a sudden you don't have customers, you don't have income, you don't have staff. So all of the know-how how to operate the business is not there. So then all of a sudden you rather than saying, well, this business was making, I don't know, 300K or 400K in profit, now it's making a loss.
Yeah.
And is that worth
Yeah.
$1 million
And
now?
all stuff that, sorry?
Is that worth $1 million now? Like a couple of months on the
No.
track. So I think that
What caused that turnaround in profit? That's stuff that you can risk manage, but you can't risk manage it when you're on the market for sale and you want to sell. You
yeah.
look at it, you review it a couple of years out from when you're ready to sell, and no question, you're going to look at how sustainable or how transferable are the key clients of the business.
Yeah.
And you start to think about, well, what can I do to mitigate that? So it's a time-based thing. Unfortunately, and you've just outlined it, some owners will, it's all too hard, it's all too late. I want to sell. That sounds like enough money to retire on. Let's have a crack at that. $1 million, $2 million. And generally the only lever is to reduce the price, because the process isn't about it's about getting a result, which is, that's the model. It's a black box. You put a price up and you try and get that and get a commission. But really, you only leave yourself a lever to go, okay, we've been on the market for 6 months, hasn't worked. Let's drop it by 200,000. And you can probably drop the price by another 200 or another 300. If you haven't kind of really scoured the market and researched who should buy this business, other than just general business buyers, you're not even tapping into the right kind of buyer, right kind of strategic buyer. Yeah, it's
Absolutely. I agree with you. Yeah. It's a tricky
really
industry.
challenging.
It makes things challenging for everyone as well, including the people that is trying to sell, because they create this big expectation that is more likely it's not going to happen unless the business is rock solid and it's a genuine investment. And then start exactly as you say. I've seen businesses that they went from a $4 million valuation. I've been tracking them for a while, and now they're selling them for $1 million. Like, well, what does that do to the owner? That owner was expecting 4, and now it's down to 1, and probably the 1 maybe it could have gotten a little bit more, because now obviously it might be demoralized and the price is going down and the performance is going down, so he's putting less and less time as well into that. So at the end of the day, it's creating the wrong expectations into business owners as well, and they don't get the full value when there are more better ways to actually do that. And they say, well, yes, it is risky. I like your business. There might be a way, like if the business does what you're saying that is doing, why we don't split the risk? And there is a way for me to actually take that of you. And maybe there might be through a reasonable earnout or a vendor's finance in the right terms that are clear, transparent. It's not the type of earnouts that become a pray to see if you get your value.
I want to just close out that last piece of the conversation.
Yes.
A lot of those businesses, there's a lot of off-market sales go on because within markets and industries and locations, there's somebody, bigger player, or even a similar size player, and those so many of those businesses get picked off. They don't need to go to market. So what's left on the market is, in many cases, it might be a really obscure niche, or there's certainly a lot of hospitality businesses, and it's an efficient marketplace to clear hospitality retail because you don't know who's going to buy them. But if you're a B2B business or an industrial business or a services specialized, to put all your hope in finding a buyer on one of the business for sale websites, it's really the probabilities are just so low. But
I agree. I
with
agree.
with earnouts, you can you just give us your take on earnouts, because it comes up. It does seem like a rational, logical way to bridge the gap if you've got a genuine buyer and a genuine seller.
Yes.
Give me a take on earnouts.
Yeah, so in terms of earnouts, there are different ways that you can structure or put a deal stack, I guess, at the end of the day. And exactly as you say, it's usually a good way, or can be a good way to actually bridge that gap. Because again, we're not selling a house here. This is more complex. And essentially you have so many dynamics and parts of the business to actually and the most part of that comes from an intangible, it's not a tangible asset mostly. Sometimes it is tangible, or tangible assets inside the business, but usually a good business valuation or a good business value will come from that goodwill or that intangible part. And essentially it's what a buyer is doing is trying to buy a predictable income or an asset that is going to generate income over time. And as you know, the markets are so dynamic. So essentially you got to look at the history of the business and say, well, this is what the business has been doing. And based on this, I believe that I can do this for the next 3, 5, or 10 years. And then usually the seller will, of course, try to promote it and say, well, my business is doing this, it's doing great, it's growing, it's doing such and such. And then usually the one that is taking all the risk is the buyer. And that's where the friction comes, and where most buyers or transactions, they end up not happening, not going ahead, because it's like, okay, I'd be happy if you, Michael, tell me that you'll sell me your business for a value, and I think that the value is there. It's pretty clear and transparent, straightforward, but usually the risk again will be all on me. And I say, hey, Michael, I think that potentially the business can do that. Let's see if that it will make that in the future. And the earnout is like, it's probably it's not probably, it's usually a performance-based type of way to bridge that gap. And essentially you'll get the last, call it 10 or 20% of the value through that earnout. If the business is essentially let's split the risk. I trust you, but also I got to be cautious with this. So if the business is doing what you, Michael, are telling me that the business is doing, then I'm happy to pay you the full value. But if not, then well, I'm happy to pay you up to this. And I think that's a good way to bridge that gap so everyone is happy. There's a big however there, and that's why I was joking about the payout, because that can be also excessive as well, in the way that if the seller doesn't have any control on the outcome of that either, or there is no clarity around how the mechanics of those can work, that can be quite tricky. So it needs to be a balanced way as well, and the right way to do it. But it's I agree, and it can be really productive, and I think that should be more normalized and talk more about that. But again, coming back to your point, I don't think that that's never going to happen with the broker involved. So it's more unlikely you're going to get the full value of your business with the broker involved if you're trying to do that.
Yeah. Yeah. With the earnouts, there's a straight up fear and trust factor, but you've really, if more of these small businesses are going to transition, it's really hard to fund them through a bank. So the outgoing owner should at least understand and consider an earnout or vendor support for lending the business, because in both those cases you are saying, and if you don't trust the buyer, it's not going to work. Yeah, I'm not talking about a level of commercial trust where, in the process of getting to a point where you've got a potential deal on the table, you need to be looking and understanding how they work and who they are, what they've done before, and you can develop a sense they're fly-by-nighters, they've never done this, or they are pretty seasoned, savvy. I don't want to go and have dinner with them, but I think they genuinely like the business. And I think at some commercial level, I think this is a reasonable decision to consider how to. And then you put aside all the fear and the distrust and say, well, how can we make it work? And part of making it work is having some good advice. If it's just, we're going to pay you 20% of profit over 500 grand next year and the year after, that you don't control the books or the finances anymore. But if you said, a really simplistic example, I'll consider that. But what you have to do is give me a look at your business plan, how you're going to run the business. Let's template this so there's a pro forma version of the profit and loss. You can't introduce new costs that weren't there that from head office or something. I mean, that's a kind of detail, but there are ways to map how you would measure it,
Exactly
how you
right.
would measure that earnout. And then if you have a disagreement, you have a process where you get someone independent. So at least you can progress from, this is just, I don't trust anybody, I'm not going to do that, to you make a considered risk assessment. And if it means getting a deal done
Agreed.
or not, it's really vital.
And that could be, maybe you're talking about, well, I'm just giving you an example here. It's like, well, I'm selling my business for 4 million. The full value is 5 million. The 5 million will be with the earnout, or getting nothing at all. Well, I think that getting the 4 million with the potential earnout when well structured, it's a lot better than, than nothing. And that's where a lot of businesses end up. And believe me, it takes time. It's not like selling a house. It's not like you engage that immediately overnight. You spend a lot of time and money with lawyers, legals, due diligence, and negotiating the contracts and the accountants as well. And it might take another 3 or 6 months before you find the next potential buyer, if you find one as well. So it's not easy.
I think like from the point of view of how can I make this work, get the right advice, understand who you're dealing with. But it's it's kind of, I think increasingly it's going to be on owners if they want to sell to make it easier, quicker, offering either finance, vendor loan, or some kind of earnout, or earnout could be some other measure. It doesn't have to be a complicated profit share. It could be a revenue share, but
absolutely.
You can do all that. You can do that. So just on your work now, and now you're focusing on Villarreal, which is your own firm, your own practice in acquiring businesses.
Right. Yeah, a couple of things that I do these days. So number one, I usually get involved with businesses that want to scale up, and then the other ones is people that want to get ready for exits as well. So put more of expertise into those areas. Simultaneously, at the same time, I'm also doing investment. Yeah, buying small businesses, exactly in this type of situations. In particular, I usually look at businesses that they are easy to turn around. They're boring, predictable. They've been around for a while. I'm not looking for the latest technology, business that is out there, or the latest innovation. You can put innovation to very simple businesses these days.
Yeah.
And with being the latest disruptor, I guess, out there, and make it a lot more profitable. I think so. I do a little bit of that work. So number one, I help entrepreneurs that are already in business and they want to grow and scale or exit. And B, I acquire businesses myself as well. So I do a bit
so you're continuing to look at opportunities. Yeah.
Absolutely. Right. Yeah. And I'm in contact with a lot of different business owners continuously. I love having a chat, having a coffee. So it's always good having a bit of a chat about that. So yeah, that's what I enjoy these days.
That's the off market right there being done the right way, which is if you scan all the business for sale sites, you don't see too much that you're interested in. Go knock on doors, build relationships with owners, and understand that they're very suspicious, rightfully so. If someone knocks on the door, is looking for a business to buy, you're doing it. You've got more of a chance for learning more about the business and securing a deal over the medium to longer term by approaching this like a relationship building exercise. And
yeah, exactly right.
Owners are fluky. something can happen to them. They can be perfectly set on going to be here for 5 years, got this plan, that plan, and then something happens. And maybe they just go and try and sell it with a broker on the website, for sale website. Or maybe if you've had a coffee with them once a year for 3 years, you're pretty well placed for them to pick up the phone and say, hey, things have changed. And you've built that relationship, but you've developed a pretty good, a decent understanding of what that business is all about. And it's an excellent way but it's a more time consuming and considered way, but it can be highly effective.
It's less transactional, which I think it's the good way to do it, I guess. It's more about, these days, I'm generally interested on helping others. I think that's what I like. It's like if I could help someone that I already been in that situation, and I could tell them, don't do that. It will save you a year if you don't do that. Or if you do this, it will save you another 3 years, and it will save you a lot of money. I think that's what I'm about, and I always enjoy there is no harm on catching up for a coffee and having a coffee and see what they're doing, and also good things flow from there as well. The other day, someone just sent me a message saying, "Hey, I'm still investing in businesses. We had a chat about 2 years ago about this, and I'm thinking about selling now. Situations have changed, blah, blah, blah." And
there you go.
And that was only just a casual coffee that I had with someone a while ago. And those sort of things happen. But of course.
And they happen all the time, because with all the best intentions in the world, running a small business is challenging and emotional and up and down. So that's where those off-market opportunities come.
Absolutely.
Yeah. Now, given that you're of that mindset to make owners more successful and investors more successful, and generally help out, what if you were landed the job of running Australia's small business department? What would your priorities be if you landed in Canberra next week, put your feet under the cabinet table, and had to put down a couple of policies to build a more vibrant and resilient SME economy? What would your
I'm not
priorities be?
A politician or someone that usually is involved in that, but I guess from my perspective, from my humble position of what I've seen, two things. I think it's number one, simple. It is small businesses, as I said before, they usually don't lack growth or customers, they lack cash flow, and that's the big bottleneck for a lot of them and puts them out of business. I'm not saying it's every situation, and I think that there is a lot more that can be done, and specifically for startups or businesses that are trying to get established and get started and give it a go. It's interesting. I remember talking about this particular business, which was my first business in Australia, and I was like, okay, I finished my first financial year. There was a little bit of profit, and then the next thing that I got is like the PAYG bill, and it's like, okay. So I just got started. I'm putting everything that I got here on the table. I'm working like crazy, and I haven't taken one penny out of the business yet, but I still gotta pay tax in advance for it. If you make taxes or if you make profit, this is your PAYG bill, and things like that, or even BAS. Yes, of course, you should be setting aside your 10% or whatever it is, the BAS or the GST. You gotta be putting that aside, but it's all good in practice, but when you're a small business owner, the reality is that you got to pay your suppliers, your staff, and the unexpected things. And then you had an accident with the vehicle, and all of a sudden you got to go and repair that immediately because otherwise you can't operate or whatever it is. And then unless you...
your cash flow.
Yeah, and so I really would like to see something that is going to give some relief or more incentives in that space for at least startups and the numbers are clear, like 95% of startups, they just died, and mostly because of cash flow. So I think somewhere around there, I think that'll be essential. The second part, it will be credits. It's interesting. How do you fund your growth? One is, of course, you got to be running the business from the budget and the numbers. But the reality is growth also, it's usually expensive. It requires structure, it requires funds. And it's like, well, how do you do that? Or you hustle your way through it and you're doing 3 or 4 jobs at the same time trying to save, which is what most business owners do. Trying to save
Yeah.
and trying to find the growth and make it happen. But at the same time, you can only do so much and you need the funds. And it's like, well, if I need a line of credit, usually the bank straight away say, okay, put your house as a collateral. How does that go for people taking risks? Most people won't.
Yes.
And that it's working somewhere along the lines of how the government can back that up. We need to be backing more of the small business owners.
It ties into it. We talked a lot about it, selling a business is not like selling a house. There's a well understood value for houses. It's much easier to lend for a house than it is for a business. So
Yes.
it goes to the heart of, I guess, of financing. And notwithstanding, there's some really innovative fintechs and who are really starting to cut through, and some better business banks like Judo, who look at cash flow of a business.
It's fantastic,
for more established ones. But you're right, it's at a national level, we've got a fascination with property, and we need more of a fascination with creating and funding good small businesses and good small business operators.
I agree. And maybe if you look even to the US as well, in the United States, you have the SBA loans. Not sure whether you're familiar with that or no.
Very familiar. It's government backing in entrepreneurs.
It is fantastic. Something like that. That'd be a fantastic way to do it, I think. You don't need to recreate the wheel. It's thinking about where some of these things are being successful and what is the outcome out of that.
It says that it says that there's value in small businesses. They're going to go through a lot of hoops in that program, but in the end, you can borrow money, and the bank will be covered or guaranteed by the government.
Yeah.
Gabe, going to have to exit this conversation.
Absolutely.
We've scaled it. We need to exit now.
Yes, absolutely.
Thanks so much for your time. You contributed a lot of really excellent on-the-ground experience. Congratulations on what you've achieved, and look forward to staying in touch and hearing more about what you do with Villarreal. And if people want to, what's the easiest way for people to reach out to you?
Yeah, so the easier way is LinkedIn.
Okay.
Or otherwise, they can just get in touch through the contact form on the website, villarreal.com, villarrealgroup.com.au.
But I think the message from you was you like connecting and talking to people that are investors or scalers, business scalers. So, all right. Thanks very much for your time, Gabe. You take care.
Thank you.
And I look forward to staying in touch.
Thanks a lot for having me. And yeah, it's been a pleasure. It's been a great chat.
So thank you very much for listening. I hope you enjoyed this episode of Owner to Owner and got some helpful advice and maybe some more clarity on how to make your business work better for you. To subscribe or to listen back or to access any of the resources or information we talked about in this episode, head over to the website owner2ownerpodcast.com.au, or you can search up Owner to Owner Podcast on your favourite pod player. If this episode or the podcast generally is really helpful, I'd love it if you could leave me a like, a rating or a review, but even more than that, I'd love it if you could share it with another business owner. There's a new episode out every couple of weeks. I'll catch you then.